Hey everyone, ready for another deep dive? Today we're tackling T-Mobile, the wireless giant, and we're going to see if it deserves a spot in your portfolio. We're using some insights from Zacks Equity Research and TipRank's analyst ratings. Two great sources, so let's see what they have to say.
Sounds good. Two perspectives are always better than one, right?
Absolutely. Gives us a more well-rounded view. So right off the bat, as of December 6th, T-Mobile is trading at $243.78. Zacks gave it a hold rating. That's like a 3 out of 5 in their system.
Interesting.
But on the other hand, analysts over at TipRanks, they're feeling a bit more bullish. Their average 12-month price target is sitting at $242.33.
That's pretty close to where it's trading now, isn't it?
Yeah, pretty much. So it seems like the experts aren't expecting some wild ride in either direction over the next year, at least according to those numbers. But we can't just stop there. You got to look under the hood, right?
Exactly. I got to see what's driving those numbers.
So let's talk about T-Mobile's financial performance. After all, a company can have a great story, but if the numbers don't back it up, well, it's not going to be a wise investment.
Right. Got to make sure those numbers are solid.
So, spill the beans. What's the story with T-Mobile's financials?
Well, Zacks highlighted some pretty impressive growth metrics. They said historically, their earnings per share, or EPS, have grown at a rate of 15.93%.
That's not too shabby.
Not at all. And get this, they're projecting growth to jump to 35.31% going forward.
Wow, that's a big leap.
It is. Plus, their current cash flow growth is a solid 30.13%. So, yeah, they're definitely not standing still.
Those are some serious numbers. No wonder some analysts are getting excited.
Yeah.
But you know what they say, past performance isn't always a guarantee of future results.
Yeah, true. Gotta look at the whole picture.
So what's the catch here? With all this seemingly fantastic performance, there's got to be something.
Well, there is something interesting. So even though T-Mobile is showing off this strong growth, Zacks gave them a C for their value score.
A C. That's not exactly a glowing endorsement.
Right. It could mean that the stock price is a bit high compared to their actual performance at the moment. You know, like maybe the market is getting a little ahead of itself, pricing in all that future growth potential.
Yeah, kind of like paying a premium for a first-class ticket before you even know if the flight's going to be smooth.
Exactly. You got to consider the bigger picture. Like, what's the competitive landscape like for T-Mobile? Can they really deliver on all those big growth projections?
Good point. I mean, they are in the wireless national industry,
Right.
and that's a battlefield. So many players vying for customers. You've got AT&T, Verizon. It's tough out there.
Oh, for sure. It's a constant battle for market share. But here's the thing. T-Mobile is actually doing better than the industry as a whole.
Really?
Yeah. Zacks ranked the industry in the bottom 46%. So the fact that T-Mobile's thriving despite that is pretty impressive. It shows they've got a good position in the market.
So they're like David going up against these Goliaths and actually winning.
Kind of, yeah. They're holding their own.
That makes you wonder, how are they doing it? Are they really innovating and keeping up with this crazy, fast-paced tech world?
Well, those projected growth numbers definitely hint that they're doing something right. And speaking of staying ahead, didn't you mention something about T-Mobile launching new 5G home internet plans?
Oh, yeah. Zacks mentioned that in their December 6th report. It's a pretty bold move, considering how much competition there is in that space right now. But, hey, if anyone can shake things up, it's probably a company like T-Mobile. They got the track record.
Yeah, for sure. And those 5G plans could be a major boost for their future growth. But let's circle back to that valuation thing for a sec. Remember the PEG ratio we talked about earlier?
Oh, that's the price to earnings ratio divided by the growth rate, right?
Right. And Zacks mentioned T-Mobile's is 1.24. Now, what does that tell us?
Refresh my memory. What's a good PEG ratio again?
Well, a ratio of 1 is usually considered a good balance between price and growth, so 1.24.
Oh, I see. So it suggests that maybe T-Mobile is a little overvalued compared to its growth rate. Like, you're paying a premium for the potential, but is it really worth it?
That's the question, isn't it?
Yeah, it seems like there's this tug of war. On one side, we have impressive growth and a company that's making waves in the industry. But then there's this question mark hanging over its head. Is the stock price justified? It's a lot to consider.
Definitely a lot to think about. And before we get too carried away with the excitement, we can't ignore what the analysts are saying. Are they as bullish on T-Mobile as their recent performance suggests?
Okay, let's hear it. What are those analysts over at TipRanks saying about T-Mobile's future?
Well, the sentiment's pretty darn positive, actually. Over the past 3 months, 18 out of 20 analysts have given T-Mobile a strong buy rating.
Wow, 18 out of 20. That's a pretty strong vote of confidence.
Yeah, it seems like the experts are pretty optimistic about their prospects.
So we've got impressive growth, strong market position. Analysts are practically throwing a party. It's starting to sound like T-Mobile might be the real deal. But you know me, I always got to play devil advocate a bit. What about the risks? Are there any potential hiccups we should be aware of?
Oh, absolutely. Always got to look at both sides of the coin. I'd say one of the biggest risks in any tech-heavy industry like this is disruption.
Right, things change so fast.
Exactly. I mean, what if some new technology pops up that makes 5G obsolete? Or what if consumer tastes just shift dramatically?
Yeah, and it's not like their competitors are just sitting around doing nothing. AT&T, Verizon, they're all fighting for the same customers, innovating all the time. That wireless market is a tough one.
Yeah, no doubt. It's a constant battle. T-Mobile might be ahead right now, but they can't afford to get complacent. Got to keep pushing those boundaries, almost like a high-stakes chess game, always thinking a few moves ahead.
Okay, so it seems like T-Mobile has a lot going for it, but there are also some valid concerns. So, for someone like me trying to figure out if this stock deserves a spot in my portfolio, what's the bottom line?
Well, like with any investment decision, it really boils down to your personal goals and how much risk you're willing to take on. You know, if you're the kind of investor who's all about growth and you're comfortable with a bit of a roller coaster ride, then T-Mobile could be a good fit. Their past performance and those future projections, they suggest there's potential for some decent returns.
But on the flip side, if you're more cautious, maybe prioritize value over risky growth.
Then you might want to wait for a better entry point. Yeah, that C for their value score from Zacks, that definitely raises an eyebrow.
For sure. So it's not a simple yes or no answer, huh?
Nope, it's a nuanced decision. And remember, even though a lot of analysts are bullish on T-Mobile, there are always going to be different opinions out there. Do your own research, make sure you're comfortable with the risk before diving in.
You know, this whole conversation reminded me of something interesting in the Zacks report. They had this visual called the price and EPS surprise chart.
Oh, yeah, I know that one. It basically shows you how T-Mobile's actual earnings have stacked up against what analysts were predicting over the past few quarters.
Exactly. It's like a report card for their performance,
Well,
right? And what's fascinating is T-Mobile's got a pretty consistent pattern of beating those earnings estimates.
that's interesting.
It could be a sign of strong management, good forecasting, maybe even a competitive edge that analysts aren't fully accounting for. Who knows?
It's definitely a positive sign. It means they're not just growing, but they're also managing expectations really well.
Right. But we can't forget those valuation metrics. Zacks also gave us a breakdown of all those figures, and one that caught my eye was their price-to-cash flow ratio.
Oh, yeah, what was that sitting at?
It was 13.34 for T-Mobile, compared to 4.75 for the industry average.
Yeah.
So significantly higher. Could be a sign they're a bit pricier than their peers in terms of the cash they're actually generating.
True. But gotta remember, context is key. T-Mobile's rapid growth, their market leadership, that could justify a higher valuation for some investors. It's all about balancing those potential rewards against the potential risks.
Okay, so it seems like we're back to that core question.
Yeah.
Is T-Mobile a good fit for your portfolio? What are the key things our listeners should take away to help them make that decision?
I'd say the main points are T-Mobile's got strong financials, they're doing well in a competitive market, they're beating those earnings estimates consistently and showing some serious growth. But those valuation metrics, they do suggest there might be a premium attached to that growth. Ultimately, the decision comes down to your personal investment style, how much risk you're willing to take, and how much confidence you have in T-Mobile's ability to keep up this momentum.
So no easy answer.
Nope. It's all about your individual circumstances.
It's like choosing between a reliable sedan and a flashy sports car. They'll both get you where you need to go, but the ride and the level of risk are going to be different.
That's a great way to put it.
And it's important to remember, investing is a marathon, not a sprint. Even if you decide T-Mobile's not right for you right now, doesn't mean it won't be down the road. The key is to stay informed, keep learning, and be ready to adapt your strategy as needed.
Absolutely.
Well, I think we've given our listeners a lot to chew on. They've got the scoop on T-Mobile's financials, their place in the market, what the experts are saying. Now it's up to them to decide if this stock aligns with their investment goals.
And remember, this is just the beginning of your research journey. Don't be afraid to dig a little deeper into the areas that piqued your interest. Maybe you want to explore their 5G home internet strategy further or compare their financials to their competitors in more detail. The more you know, the more confident you'll be when you're making those investment decisions.
Exactly. Knowledge is power, and we've tried to arm you with the insights you need to make an informed choice.
And hey, if you've got other companies or investment topics you'd like us to break down, just drop a comment on our YouTube channel and smash that subscribe button. That way you won't miss out on any future deep dives.
Yep, we're always on the lookout for new ideas, and we love hearing from our viewers. Don't be shy. Let us know what you're curious about, and we'll do our best to unpack it all for you. That's right, we're here to help you navigate this wild world of investing. Thanks for joining us for this deep dive into T-Mobile. Until next time, happy investing. So T-Mobile's got strong financials and positive sentiment from analysts. They're leading in a competitive industry, but yeah, we did talk about those valuation concerns. So knowing all that, where do you see T-Mobile fitting into your own investment strategy?
Well, that is the question, isn't it? It really comes down to, like we were saying, your personal investment goals and your risk tolerance. If you believe in T-Mobile's long-term growth story and you're okay with possibly paying a little bit of a premium for that growth, then yeah, T-Mobile could be a good addition.
Yeah, it's like deciding whether to buy the brand new model of a car or wait for a slightly used one. Yeah. I mean, the new model's got all the bells and whistles, but it comes with that higher price tag. While the older model, you might get similar features, but at a better price.
Yeah, that's a great analogy. And just like with a car, you got to do your research before you buy.
Exactly.
Look under the hood, take it for a test drive, make sure it fits your needs and your budget.
Couldn't have said it better myself. So, before we wrap up, let's remind everyone that this is just a starting point. We really encourage you to keep looking into T-Mobile. Especially the things that caught your interest, like maybe you want to dive deeper into their 5G home internet plans or really compare their financials to their competitors. The more you know, the more confident you'll be making those investment decisions, right?
Absolutely. And if you're looking for more insights on T-Mobile or any other company, just let us know down in the comment section of our YouTube channel. We're always looking for new topics to cover, and we love hearing from our viewers.
And hey, don't forget to hit that subscribe button so you don't miss any of our future deep dives. We've got lots more exciting companies and investment insights coming your way. Thanks for joining us for this T-Mobile deep dive. Happy investing, everyone.